the great pleasure of being joined by Professor Dr. Joachim Wuermeling. Joachim's on the executive board of Deutsche Bundesbank and has responsibility for bank supervision, information technology and risk control. And Thomas Kurian. Thomas is the Chief Executive Officer of Google Cloud. So let me just start with a couple of questions to you both. So maybe Joachim, if I could start with you. How is digital finance impacting the supervision of the financial sector, and how is the Bundesbank adapting as a consequence?
Well, thank you very much, Daniel, for inviting me to that Fireside side chat. I'm very sorry there's no fire besides me, but maybe the fire comes from the moderator and from the distinguished counterpart here. So I'm happy to participate here. And you indeed asked me a great and a very difficult question. How does digitalization of finance actually influence supervision? And well, let me start off by saying the digitalization of finance is maybe the biggest challenge for supervision after the financial crisis and maybe now the COVID-19 pandemic, because it changes not only specific items of our supervisory tasks, but the whole structure actually. And so our challenge, I like to say, is kind of threefold. On the one hand, our ambition is to enable banks to make use of the new technologies. We want them to be able to reap the benefits because this makes banks more efficient, more profitable, so they can generate more capital. They can serve the economy better. And in particular, with the use of AI and machine learning, they can increase their risk monitoring in various fields. So we are positive to digitalization of the sector of finance. On the other hand, digital or the use of technology brings about new risks to finance. And I'm sure, Daniel, we will speak about some of these risks, in particular cloud computing, but also others along the road. For us as supervisors, these kind of risks is very difficult to grasp because it's not financial risks, it's operational risks, it's IT risks, it's algorithm risks. This is not the things we are used to deal with. And that's why we really have to step up our competencies and our capabilities to properly monitor these risks. And the second issue is that, of course, these technologies are also enabling supervision to do its work much better. Because what is supervision? It's about analyzing data in the forefront. And here we can improve our work, our processes, our analytics, our information base a lot with the use of digital technologies. And that's why Bundesbank, as well as the ECB, but also the Bank of International Settlement, is increasing their effort to learn about these technologies, to find use cases, to apply them. And just recently, Bundesbank and BaFin have adopted a digital agenda for our institutions to really reap the full benefits of the technology for us.
Thank you very much. Thomas, if I turn to you now, innovation in digital finance, what does cloud bring to the European financial market? So you know, why cloud, why now, what for, and what has changed since the COVID-19 pandemic?
Thank you, first of all, for having me. We're working with financial institutions in a variety of different countries in Europe to bring technology to digitalize them in 4 different ways. First is to provide a deeper understanding using data and analytics of customers, of risk, and how to model the financial system and the exposure that a financial institution has to various changes in the market environment. That's number one. Number two, applying AI and machine learning to streamline financial processes within banks. So for instance, allowing people to use AI and machine learning to detect anti-money laundering much more precisely, to use AI and machine learning to streamline the KYC Know Your Customer process, and to streamline how products can be originated and distributed much more efficiently. For instance, allowing people to get offers without having to go to a branch office, for instance, and being able to use machine learning to streamline the processes within the financial institution. The third area that we work a lot with financial institutions on is to digitize the customer interface. Particularly accelerated by the pandemic and the restrictions on mobility that people have, they still want to have the broad breadth of services that financial institutions offer them. And these could be not just transactional services, but advisory services, wealth management, and the broad range of services. Most organizations today do not have those capabilities in a digital form. And so we're helping financial institutions be able to reach both their consumer and institutional clients more efficiently. Lastly, we are working on with some financial institutions on new products. So for example, new platforms to securitize and distribute certain kinds of assets, new forms of measuring certain kinds of risk. A common example is, how do you measure cyber risk? It is very difficult to measure it. How do you quantify that? So we have a number of such engagements going on, and cloud provides us the capability to deliver these technologies much more easily and efficiently to financial institutions.
Thank you. Thomas, if I could come back to you, how are bank supervisors then viewing the benefits and challenges associated with cloud adoption?
So we work with financial institutions and regulators in many different countries in the world. Globally, we work with regulators in 39 countries. We see the need for regulators to have the appropriate regulatory frameworks to ensure the benefits of the adoption of new technology is balanced with the appropriate oversight of the use of the technology by institutions. And so we work with people to provide better audit procedures so that people have more transparency on how the technology is being used, to provide better ways for central banks, for example, to use machine learning to understand the financial position of different institutions, as an example. And the third is to also make, when machine learning is adopted, a common question is, can someone explain why did the machine learning model get to a particular outcome? For instance, it said that this particular individual is approved for a certain kind of financial instrument and the other one was not. Was there a kind of a fair algorithm in making that determination? We provide all of these. We are actively working with regulators to better understand the regulatory framework, to provide the necessary transparency, and to make sure that as financial institutions adopt the technology, that it's positive for the global financial system, and particularly for the European financial system, and does not introduce negative consequences and additional risk to the financial system.
And Joachim, do you share that view? I mean, how you're wearing a bank supervision hat, how do you view the benefits and the challenges? You mentioned some of the risks before around cloud adoption.
Indeed, cloud services open up a wealth of benefits and innovative potential. And Thomas mentioned some of these. Well, as supervisors, we are not that much looking into processes, into customer journeys, because this is not very relevant for the risk of the bank. But of course, we see that algorithms are also applied provided for tasks which are near to the stability of the bank, creditworthiness, liquidity management, capital management, and you mentioned already that the application of algorithms or the implementation of algorithms can go much beyond the front end to the customer. But we see, of course, that cloud usage can boost big data analytics and artificial intelligence, in particular from small and medium-sized banks. And this is something which is very important for the level playing fields of banks. And in particular in Germany, we have a lot of small and medium-sized banks, 1,500, which can mirror the fragmentation or of the German industry with Mittelstand and so on. So it's essential for the German industry to have this diversified banking industry. And if by cloud computing also small and medium-sized enterprises, banks are put into the situation to use artificial intelligence, this contributes much to the level playing field. But on the other hand, cloud technologies, of course, also introduce risks which require proper management. And Google, of course, is very well aware of these risks. And I think you invest a lot to minimize the risks of cloud and so on, because it's the biggest reputational risk you have. But in the case of banks, it is even more complicated because banks, of course, have a weak negotiation position and a limited control vis-a-vis their large hyper ledgers. They have the risk of vendor lock-in, which might materialize if a bank cannot easily switch between providers due to technical barriers or prohibitive high switching costs or whatever. And finally, we as a central bank and Bundesbank, we also not only responsible for the micro supervision, but also have a holistic view on the financial system, financial stability view on the system. And of course, concentration risks might arise if many institutions or other companies outsource the same to a small group of service providers. And here we also have to have a look on.
Just on that holistic view, Joachim, the ECB, if you think of your ECB hat on supervision, they've been very vocal about bank consolidation. Now, having worked at 4 large banks, 3 of them European, the legacy IT problems they have around it's a big barrier to consolidation in the banking sector. Does cloud help?
Well, this may be also a question to Thomas, and he would, and I'm sure he will say, yes, cloud will solve all the problems of consolidation because it offers services in the cloud which can be connected even to legacy hardware or software and allow a consolidated bank to have the main operations in the cloud, but they have their interfaces to legacy problems. So I would be quite optimistic to say that with microservices and so on, a cloud service on top of the legacy systems could make life for 2 or 3 banks who merge much easier. But up to you, Thomas.
So maybe Thomas, if you could answer, but also just another question around the market, and that's the difference between European banks compared to their US and global counterparties in terms of cloud strategy and adoption. And any views on that, as well as the consolidation point, would be welcome.
Sure. On the consolidation point, we see some leading financial institutions looking at not just modernizing and replatforming their core systems, but also thinking about taking their core systems and making it available as a platform for other financial institutions to use. And that does not mean that one financial institution acquires another, but one financial institution offers capability to others in a form of utility model, for example. And we are starting to see that emerge in different parts of the world as a vehicle to make it easier for smaller institutions to focus on servicing customers and providing financial services without having the heavy burden of cost associated with some of the IT systems that they need to have. In addition, we do see some organizations say, I've been on the same technology foundation for 30 years. Some of the systems are really old. They are difficult to maintain because the people who wrote those systems no longer work at our organization. Therefore, by implicitly, they are introducing new forms of risk to the financial institution. And so they do need to modernize it, not just for the purpose of lowering cost, improving efficiency, and potentially being a consolidator, but also to reduce the financial exposure and risk that they have. With regard to adoption patterns, we see different things in capital markets in the United States. Cloud has been adopted more quickly than in other parts of the world. But with regard to commercial banking, we see different institutions in Europe really stepping forward and leaning forward and being much more, modern in their approach to technology. And we see Europe keeping pace, in some cases, in some countries, even outpacing the United States in adopting of cloud and modern technologies to innovate the financial institution itself.
From the adoption, in terms of adoption of cloud technology or technological innovation, I also see a mixed picture in Europe. There are banks, and as a bank supervisor, I cannot name them, but everybody knows them, which are front runners in adoption of cloud technology. We have even neobanks, which are they like to say they are born in the cloud. On the other hand, when I walk through the streets in New York or in Hong Kong, I see people queuing before the branches of banks and even handing in checks and all these kind of things. So when I see this, I think, well, there's also something to do. And as we saw last year and the year before, even so modern places as Hong Kong and Singapore issued new kinds of banking licenses to increase the competition and the adoption of technology in the banking sector. So here I think we are on a good track, and we see, of course, a speeding up of this process in Germany. And recently, and as this is public information, I can mention it here. Google and Deutsche Bank concluded an agreement for an innovation partnership and so on. And I hope, Thomas, that from your point of view, this is not only to make Deutsche Bank use more Google services, but you also hoping to get some insight and some ideas and some inspiration from the collaboration with Bundesbank. So a win-win situation for both companies.
Yes, we do.
Joachim, can I move on to talk about strategic autonomy, which is a debate that Europe is having at the moment. What role does strategic autonomy play in finance and for third-party providers?
This is a difficult one, but a very interesting one. And my feeling is, but maybe you know better from you're located in Brussels with your company, that the concept is quite vague, and it's a concept which comes from the experience with the Trump administration, and of course it is to be seen in the context of Brexit. And Europe realized that it's completely dependent on offshore financial marketplaces in an essential economic function, what is financing of its own economy. And then there are, of course, also the digital issues, big techs and so on, like Google. And from this feeling, which is, by the way, not only a political position in finance, but also in other areas. The new European Commission said we want to be a global commission. The French president said Europe is a shield also against whatever. And here there was used indeed the concept of autonomy, which is, by the way, has been replaced by another notion in the last papers of the Commission, which is kind of open market autonomy or something like that, which is even more ambiguous because we have to be, one thing is clear, there is no such thing than autonomy in global financial markets. And it's not even desirable because we need, of course, to have the European Union, our channels to the international capital flows, because we want to invest everywhere in the world. We want to take up, to refinance ourselves everywhere in the world. So the concept of autonomy does not really cover this a little bit more sophisticated system. I think what we would like to achieve is that we will be always able, continuously be able to finance our economy in Europe from our own funds. To be able to finance our economy from our own power. And this is today not the case because investors take their money to London or to New York, and the companies who need money go to the same place, take the European money from London for their investments in Europe. And this is not how it should be. All big economies in the world have their own financial system, which allows financing their own economy, be it the United States, be it China, be it Japan, Australia, and so on. And this is, I think, but it's a delicate balance which has to be, which we have to strike to allow, on the one hand, that we have our own channels to the international capital flow, and on the other hand, be able to finance our economy by ourselves.
Thank you. And Thomas, can I turn to you now on this? How does Google Cloud think about strategic autonomy? Will you be able to meet your customer sovereignty requirements?
Yes, just as Joachim said, we see the financial system globally is interconnected. So by nature, organizations that want to participate in the global financial system have to have the ability to reach across national boundaries and participate in what's fundamentally today and recognized by regulators in every part of the world. The interconnectedness of the global financial system has provided many benefits for organizations. Now, as a technology provider, we also recognize that as cloud computing becomes a bigger part of the technology footprint in IT globally, and particularly in the financial system, that we need to support the regulatory and policy frameworks that governments want to provide to ensure that the financial system can get the benefits of cloud technology, but also can do so under the appropriate supervisory authority to make sure that in adopting the new technology, we're not adding or increasing systemic risk to the financial system or to institutions. Today, in our conversations with governments and policymakers, we have focused on three primary things. One is providing the necessary data and operational controls to ensure that financial institutions can both control the location of the data, who has access to the data, the protection of their data, so that they have full control of that. The second is supporting new regulatory frameworks so that they have transparency and auditability of us as a cloud provider. And the third one, we have done a lot of work to ensure that there is technical approaches as well as business approaches to reduce concentration risk. And particularly, we have a solution we call Open Cloud to allow financial institutions to run our technology on other platforms to ensure that they are not locked into our technology, and we can provide, therefore, a measure of protection against concentration risk. So we are committed to working with the regulatory organizations in Europe and in other parts of the world, because we do think that's an important function that we need to meet, listen to, accept the requirements, and work with.
Thank you. So one last question each for you. Joachim, if I just come back to you, you may have caught the end of the discussion on DORA. The European legislators are working to introduce a new oversight framework under DORA, which includes open cloud. What are the objectives and challenges that you see for this? And coming back to your sort of ECB role, has the SSM started to think about the lead overseer framework and how this may interact with the supervisory framework for individual banks?
Well, first of all, we support this idea to introduce European regulation for critical third-party providers. And well, I personally have advocated that already a long time ago, because I see also, to be honest, the limits of banking supervision when it comes to big techs. So of course we can introduce lots of requirements, but finally we will never get to a situation where a bank controls a hyperledger. So I always advocated a bigger solution, which is now proposed by the Commission with DORA. And you pointed to a very delicate issue, which is not solved yet and not even discussed broadly. To what extent could the oversight regime of DORA substitute banking supervision? This question has not been answered. And my suggestion would be, yes, it should to a certain extent. If there is a go from the European authority to a cloud, then a whole range of aspects cannot be subject to supervision on the next level. But what remains, of course, is the responsibility of the bank for the interface. And as far as I understand cloud, there's also lots of marge de maneuver or possibilities for a cloud user to vary the implementation, to make changes, to adopt this and not that, and so on. And this is finally remains into the responsibility of the bank, and this is still subject to supervision. So what we see here, and this may be also a more general remark, that the fragmentation of the value chain of banks lead to a much more complicated supervisory regime, to a kind of a hybrid regime where the third party provider is supervised by another institution than the bank itself. So this, of course, makes things much more complicated, and our former approach of a single point of entry, the supervisor to the banks, that may be a concept of the past.
Thank you. Thomas, very last question for you. How do global providers look at this type of regulation? Do you see it as helpful? Do you have any concerns?
We at Google are actively working with policymakers around DORA. We do think having a consistent oversight framework will be helpful for both the adoption of technology with the appropriate oversight, and also the ability for cloud providers like Google to meet the requirements that reassure European governments that adopting new technology can be managed in a way that protects the risk to the financial system. So we do welcome DORA. We are still working through, there are some elements of the proposal that we need to understand more clearly. We are working through that. And then most importantly, we're also working through, just as Joachim said, the understanding of what the cloud provider themselves offer and how it is consumed or used by the financial institution, and the relative responsibilities that we have as a provider of the technology, and what the financial institution which uses the technology should be responsible for. So we're working through all of those, but we welcome the framework in general, and we're actively working to understand what we need to do and what are the implications of the framework.
I think that this is it's a very reasonable approach, because what we learned in dialogue and conversations with the banks in Germany and throughout Europe is that there has been still a hesitation to use cloud because it is not supervised, and people do feel uncomfortable to pass all the IT into a system which is owned by somebody else. And there was even some years ago people saying, well, if we had a European supervision of cloud, we would feel much more comfortable to use it. So this kind of approach, I think, can also be a boost for the adoption of cloud by banks in Europe.
Can I thank, we're slightly overrun. Can I thank you both, Thomas and Joachim, for sharing your insights with everyone at the conference. It's the only session I've chaired where the number has actually gone up of participants, and it's the last session of the day. So thank you both. Appreciate the time that you've taken out of your busy schedules. So have a nice evening.
Thank you very much. For the pleasure. Bye-bye.
Thank you.
Bye.